It's been a while. Welcome to Francis Crypto Academy. Please don't forget to subscribe and follow my channel. Subscribe to my channel and turn on the notification bell such that we can move on together. Okay. So today we are going to talk about. I'm going to teach about the order blocks. Order blocks. Yes, we are going to talk about the order block. Order block. Pay attention here. What is an order block? An order block is referred to as the last candle before an aggressive move, before an impulse move, before the institutional move. I hope you're understanding. Order blocks, this is where all the order blocks are the places where the big boys always put their money and always willing to add more money from. Okay, you know, they cannot just put much money at once, so they keep on adding in more money. So these are the points that where these big banks, the central banks, the big boys always add more money into the market. Now I'm going to show you how an order block is formed, because we have two types of order blocks. Let me first here explain to you the types. We have two types of order blocks. We have a single candle order block, single candle order block. Even if I don't write order block, you know we are talking about order blocks. Have the single candle and we have the single candle and the standard order block. Okay, so I hope you're getting what I'm saying. We have a single candle, order block and a standard order block. Let us go to our charts and look for these order blocks. I don't want to waste more time. I don't want us to waste more time. Sorry. Let me try to remove these drawings the way for the last year, the last lessons we had. So let me remove them such that they don't distract you. Okay, so here I'm on the charts. And I want to show you what do I mean by a standard order block and what do I mean by a single candle order block. First of all, we always look for these order blocks in highs and lows. Okay, they happen where there are highs and lows. So this one is referred to as standard order block here. This one here. Let me show you. Let me show you. I don't know whether you're seeing. I mean this one here. This one here. Okay. So here the candle, the market came and formed. It formed this. This one is a standard one. It formed an imbalance. The first candle has to sweep liquidity. The first candle has to sweep liquidity. Okay, and then after sweeping liquidity, it forms an imbalance immediately. Let me zoom in such that you can see it clearly. Let me write for you here. an order block should contain these two things. It has to sweep liquidity first. Sweep liquidity. So receive liquidity. It has to sweep liquidity, and at the same time it has to create an imbalance. It should have a proper imbalance. Okay, a proper imbalance. So you have to come here and look for what we are talking about. These are two candles. I mean this red one, this red candle, and this green candle. So the red candle swept out the liquidity, swept this candle's liquidity, and this green candle created an imbalance. So that one is called a standard order block. A standard what? Be engaging, engage yourselves in what I say, such that you can understand very well. Okay, that is called a standard order block. It's a standard order block. A standard. Let me let this on the. This is a standard order block. Are you getting me? Hope you're getting me very well. That's called a standard order block. It sweeps liquidity and creates an imbalance. And now we have what we call single candle order block. I had seen one here. You know, when you zoom in here, you can see that this green candle swept liquidity here. You see? This green candle, this one, this candle, it swept liquidity from this red candle. So after sweeping liquidity, it swept liquidity and even created a proper imbalance. It has a proper imbalance here. Are you seeing? Are you all seeing? You know, you have to look like sharks. You always have to look like sharks in the market, such that you don't be cooked, don't be trapped by the market makers. I'm going to show you in the next video what do I mean by market makers. I'm going to show you the financial food chain. I'm going to teach about liquidity in the next videos, the next two videos. Okay, so you see, it swept liquidity by itself and even made and created an imbalance by itself. One candle, it swept liquidity and created an imbalance. That's called a single candle order block, and that one is not so, it's not so nice. It's not so nice. You should basically wait for these standard ones. They are very, very good. Okay, you know, I want to teach you smart money concepts. Don't enter in the market aggressively. Be smart. This market is run by algorithm, so you should also be willing to learn how the algorithm works, and you start following the algorithm such that you can make good profits. If you rush, they will cook you. You will provide liquidity in the market. You'll keep on depositing as we withdraw. I'm not saying this just to mock you, but my friends, that's how it works. If you don't take your time to learn, you will deposit and will withdraw. For you will keep on depositing, they take your money. Depositing, we withdraw. You deposit, we withdraw. We withdraw your money. Don't think that we have a other people's money that we are withdrawing. We withdraw those retail money. Okay, so after this one, let me show you even the same video. I don't know, yeah, I still have some more time. Let me show you what we call a mitigation, sorry, not a mitigation block, because it might confuse you. We have what we call a breaker block. A breaker block, because we have been teaching about an order block. Now let me show you what we call a breaker block. You know, when the market creates this, now after this breaker block, this order block, let me mark for you the order block. I mean, the order block is not that candle, that fair value gap. It's just this move, the all of this move, you mark it. Okay, the move that swept liquidity and again created an imbalance. Majorly it's on this candle, this last candle before that aggressive move, that one, that red candle. Now, okay, in a bullish scenario we have to take that red candle. Okay, but in bearish positions you have to take this even it can be a red candle still, but it can be a green candle or a red candle. But right here we have a red candle, it swept liquidity, and a green candle created an imbalance. So here is what we call the order block here. So by all means the market has to come to this point. By all means, by all means, by all means, that's what I mean. I mean by all means. It's not a choice. The market will not make a choice. Yeah? Because these are places for these are called the institutional points, the smart money points. Okay? These are smart money points. So when the market comes to this point, it will respect this point. This point will work as a support for the market to go back to the upside. So let me show it. Let me draw it for you. When the market goes from this point, it will go like this. But when it tries to retest like this, it has to go up. So this one will be called our order block. But now we have a breaker block. A breaker block is a failed order block. What do I mean by failed order block? A violated order block. When the market goes up like this and it comes, instead of testing here and it goes up, but it does the opposite. It comes and breaks this order block. So when it breaks that order block, it becomes a mitigation block. So when the market breaks here, it cannot break like this and then it comes and break again. No, it can't work like that. When it breaks, it comes back and retest. Now this one will be it will be a breaker block. Are you getting me? So the market has to respect it from the downside. So when you see it being broken, just know we have changed character. Okay, we have changed character and now we are heading to the down movement. If it was bullish, just know now we are going bearish. Are you getting me? If it was a bearish, just know now we are going bullish. Now it works as an order block if it's respected, but if they violate it and break through it, it will become a breaker block. Okay, are you getting me? Now let me take you to another video. I don't want to make long videos. I want you to watch these videos very well. Watch repeatedly. If you have something that you have not understood, repeat the video. Repeat it until when you understand, because every video I'm making here, it has a point. I don't just make videos anyhow. I make videos with an aim. So in the next videos we are going to be opening up big things that need this previous videos data. You have to be with this previous data. We have been understanding. I'm hoping that we have been understanding these previous videos, because in the next videos I'm going to speak more of the trade language. I'll be speaking more of the trading language because I have already told you what happens. Okay, so I don't want to come up in the next video and talk over an order block. I tell you here now there's an order block. I be like I'm teaching myself. Okay, so watch the videos very carefully such that we go on the same line. I want us to move together on the same line. We meet in the next video. Thank you for watching. Okay.